Well, we have quite a bit of stuff to unpack this morning. We're seeing an interesting divergence taking place in the crypto market right now, which I do want to talk about with you guys. Could we, in fact, be seeing the government shutdown end as early as today? There's a lot of information here, so we're going to just dive right into it. So again, if you guys haven't already, show your support for the channel down below. But what we're seeing this morning that I think is very telling is BTC and Ethereum are not doing well. BTC is down 1.18%, Ethereum's down 2.3%. Many other assets in the space are down less or are green. ADA is actually down we'll call it 0.5%. Some other assets are still running pretty hard. We're seeing actually AI coins kind of take a big step forward. ICP up 20% again today, doing incredibly well. Glad I still hold my ICP. Haven't done anything with that. But Near is up 6%. We're actually seeing Fetch. I think Fetch was up 7.7%. So right now, yeah, virtual 7%. AI coins are kind of leading the way on this little pump we're seeing right now. But the fact that alts are starting to hold up better than BTC, maybe it's just a one-off day, but I think it's also a little bit of a point that's worth noting because we've been waiting for this confidence to kind of return to altcoins for people to say, hey, this is a comfortable range to accumulate at, and we're seeing exactly that. So you guys can see in terms of BTC dominance, we're attacking this trend here again. Could we be on the verge of entering this? Possibly. We'll have to watch and see how the day progresses. Right now, BTC is toying with 100K. It's trying to hold support here. It did dip below this earlier this morning. Right now, it's about 5:45 a.m. Central Standard Time, and maybe by the time this video comes out, it's back below it, but it's just kind of wrestling with the trend right now. Everything is wrestling with the trend, and we're trying to obviously extend and turn this into a good Friday and head into the weekend on a very positive note. And, you know, it's possible that we could, in fact, see this. I don't know if anybody heard this or not, but a deal to reopen the U.S. government is close, according to Politico. And actually, the Senate will be voting today to advance a deal aimed at ending the government shutdown. So it seems like we are closing in on this very, very quickly. And like others have noted, the last time the U.S. government shutdown ended, we saw the markets go on some rip-roaring runs. Now, again, correlation isn't causation. It doesn't necessarily mean that this is going to happen again. There's a few things we need to watch for coming out of this government shutdown. Again, there's going to be a lot of macro news that comes out. We're going to have questions about inflation. We're going to have questions about obviously GDP from Q3. But here's the big one is jobs, right? So for example, macro job cuts tracker is actually showing the largest job cut month we have seen in the last 2 years, which that's kind of troubling. Here, this is what I'll say. It's not that troubling, but it's troubling. The reason why it's not that troubling is, again, we're in a government shutdown. There's the possibility that some of these jobs are, in fact, tied to the government, concerns about the government. So maybe we see some of these jobs actually picked back up by the time the government shutdown is done. I'm, again, not saying that's going to happen for sure, but that is something that we need to watch very, very closely. Now, the reason that this is kind of good more long-term is, again, what is the Fed focusing on right now when it comes to rate cuts? They're focusing heavily on the jobs market. If the jobs market is looking like it needs relief, you're likely to get an interest rate decrease. But these types of numbers could, in fact, accelerate that from a 25 basis point decrease to a 50 basis point decrease. Don't know how the market would react to that. Some might view that as, you know, the Fed panicking and trying to play catch up, which, again, I think we all understand that they are running just a little bit behind. But that's something they're going to be watching very, very closely. Now, so this is something that Ollie Charts posted yesterday, and I wanted to clear this up because this was actually in opposition to what I was saying. So what this said is stablecoin reserves on exchanges jumped by almost 10 billion in the past month, hinting that traders are swapping crypto into stables. That's not what it's indicating at all. In fact, the reason why is, what are we watching asset supply do on exchanges? It's going down, right? We look at BTC, we look at Ethereum, look at ADA, look at all these different assets throughout the space. Exchange reserves are in fact leaving exchanges. And what you're seeing is, if stable coins are flowing into exchanges and assets themselves are flowing out of exchanges, you're watching people actively accumulate and remove exchange supply. Hopefully that makes sense, right? So, not to call him out or anything like that, but I want us to have some clarity. Another indication of this is, if people were swapping to stables or sending stables to exchanges to offload into fiat, you would actually see overall stablecoin supply retracting. It's not, it's expanding. It has been expanding for a very long period of time. And again, these are some big signs that one, we're not in a bear market cycle, or we're not in the top yet or anything like that. Now, again, maybe I'm wrong. Maybe this thing, we've seen some of these trends flip very quickly, but that's what we're watching take place right now. Now, something I did want to point to as well is we did get some long leverage liquidations again over the last 24 hours. Leverage, I guess, over the past 24 hours hasn't been a major problem, at least as of yet, but we'll see if it's going to stay this way. We're still down at $141.9 billion in leverage in the crypto market, which again is still very consistent with what we were seeing in the summer. So it's nice to see that things have cooled off to an extent and they're staying cooled. We don't want people to start betting very heavily and cause potential further drops. Now, what was a nice shift here as well in the middle of the week, or I guess more now back half of the week, is we're starting to see institutional players accumulate. BlackRock actually finally buying yesterday. If you guys remember, not yesterday, 2 days ago, BlackRock was the only one that sold on both the BTC and Ethereum side, but yet now they're buying on the BTC side, $240 million over all institutional players over the last 24 hours. On the Ethereum side, we actually saw a very small day, $12.5 million accumulated, but an accumulation day nonetheless, the first accumulation day we've seen actually since October 28th. So that's a very promising sign. And again, BlackRock was accumulating. So I think right now it seems like we're in the discounts where institutional money feels comfortable. And again, remember 100K is a psychological level for BTC. So maybe they're actively trying to support and defend price here, but that's kind of where we're at. We're going to have to wait and see. The government shutdown ending would be the very, very big news for the market. It's a thing that could cause it to move in a volatile way, one way or the other. Some people are saying, oh no, it's bad, it's going to send the markets down. We don't know. We don't know how people are going to react. Again, I think right now we've still been in a time of uncertainty. People are confused and concerned about the shutdown because, again, it's the longest shutdown in history. Sometimes if those drag on forever, you see what we're seeing in the charts, and it's just this exhaustion, just this, we'll call it shutdown weariness. That's probably the best way to describe it. So, and understand this. We had a pretty quiet day yesterday in the crypto market, despite elevated volume. We actually had $180 billion in trading volume over the last 24 hours, which is a slightly elevated day. But yes, but yet the volatility is actually decreasing. So that's the interesting thing here. Now, again, we could still see ADA and other assets move any which direction here. We could be, retesting the bottom of our trend here. We could be trying to create a breakout. And again, I'm not trying to play both sides of this. This is just kind of where we're at right now. We're going to be heavily dependent on news. We're going to be heavily dependent on data. Okay. So I appreciate you guys. I hope you enjoyed the video. Let me know your thoughts below, but have a great day. Catch you guys in the next one. Take care.